China just shocked the world. This week we saw a major tectonic shift in economic world power, and China just scored another devastating blow to the West. Right now I'm traveling through parts of Europe, witnessing how these Western policies are crushing these countries. In France, the streets are on fire. Throughout Belgium, throughout the Netherlands, where these Western policies have stripped 3,000 farmers of their right to farm. I'm in Scotland right now. Rainy Scotland right now. It's beautiful, but the people here are worried that these failed policies are going to crush their way of life. Are they next? Are they going to take away their farms? Are they going to take away their rights? If you're an investor, you need to pay attention to what's happening because we are witnessing a major upheaval. We'll get to all of that in a second, but first, the United States has just issued a warning. Don't travel to China. Stay away. They've increased the beating of the war drums recently, putting more warships into the South China Sea. The U.S. Congress recently announced a 10-point plan for war with China, so it doesn't take a genius to see where all of this is going. The United States is losing enormous power to China. They're becoming desperate, in fact. And there's nothing more dangerous, of course, than someone who's losing power. They do crazy things. We'll get to the major news updates in a moment and what this means for your wallet. But first, if you find value in the investing content that we provide, please subscribe to our channel. Our goal here is to empower you to make more intelligent investing decisions, understanding the larger global context of those world events because things don't happen in a vacuum. All of these things are driving these market conditions right now. So in the past 72 hours, we've seen a dramatic ratcheting up of tensions between the United States hegemony and China and Russia. Strap in, folks, because we're about to delve into an economic war like we've never seen before. In a shocking move that could have disastrous consequences for the United States, China has announced new export controls on 2 critical metals used in microchip production.
Beijing is now restricting exports on 2 widely used metals that could damage global supply chains. The chairman of the Global Mining Association of China commenting, quote, China has hit the American trade restrictions where it hurts.
Now, the Chinese government is citing national security concerns as a justification for this move, but we all know that's just a thin veil for their true intentions. It's a way of saying we see what the West is trying to do in Taiwan, and we don't appreciate it. We're going to protect our sovereignty as a nation. You want to dance? Let's dance. You want to threaten ships in the South China Sea, which is our backyard? We don't appreciate it. You want to build another 2 military bases in the Philippines? We don't appreciate it. You want to build another military base and put nuclear submarines in Australia? Yeah, they're doing that. We don't appreciate it. Why are you meddling in our backyard? The metals in question, which are vital components in the manufacturing of semiconductors. These semiconductors, as many of you know, are the backbone of modern technology. They're used in everything from smartphones and laptops to advanced military systems. Yes, all of our fighter jets use them. All of our aircraft carriers use them. So by imposing export controls on indium and gallium, China is effectively tightening its grip on the global supply chain, particularly the semiconductor industry. And this is where the economic war aspect comes into play, folks. This move by China is calculated. It's a calculated maneuver to gain even more control over a sector that the United States has long dominated. Not anymore. This is a dramatic shift in power happening right before our eyes. The U.S. has always controlled this vital pipeline, but things are about to change. Now, you might be wondering, why does this matter? Well, let me break it down for you. The United States is heavily dependent on semiconductors, not only for our technological advancements, but also for our national security. Our military relies on cutting-edge technology to maintain its superiority, and semiconductors are at the heart of that. The U.S. military is hurting. Recruiting numbers are in the toilet. And now the technological backbone of the U.S. military is also at risk. So by controlling the supply of these critical metals, China can effectively cripple the American tech giants and hamper our ability to produce advanced electronics. It's a classic case of economic warfare, and make no mistake, China is playing for keeps this time. But why now? You might be asking. Why has China chosen this particular moment to strike? Well, I frankly blame the United States. I blame NATO. Now, I know that's a contrarian position, but it's an educated position based on facts. The Western media is painting China as rearing its ugly head, the rise of the Chinese dragon. They're ready to strike. That's how the Western media portrays it. but they don't know what they're talking about. The problem, however, is not China. It's the United States, which for decades, the United States, of course, has been sitting on these precious minerals at home, but refuses to cultivate them. Environmentalists and politicians have totally outsourced our rare earth mineral production to China and Russia. You want some uranium? Oh, America is sitting on mountains of uranium, but regulations make it impossible. So instead, we import nearly all of our refined uranium from Russia. That's right, a country we're at war with, by all accounts. They could flip that switch and shut off our nuclear reactors overnight. China is not the problem. China is playing the game, and they are winning. They know that America is ratcheting up its war rhetoric against them, threatening to bomb Taiwan's largest chip manufacturer, Taiwan Semiconductor. Yes, a member of Congress admitted their plan.
Just making it very clear to the Chinese that if you invade Taiwan, we're going to blow up TSMC. I just throw that out not because that's necessarily the best strategy, but because it's an example of debate that's out there. And of course, the Taiwanese really don't like this idea.
So China is being smart, saying, okay then, you're planning to attack us? We'll make it harder for you to get the minerals you need to build your microchips that power your fighter jets. It's no secret that the United States has been facing a semiconductor shortage in recent years. This shortage has had a ripple effect throughout various industries, from automotive to consumer electronics. China sees this vulnerability as in exploiting it to its advantage. And to add insult to injury, China has been aggressively investing in its own domestic semiconductor industry, pouring billions of dollars into research and development. The United States, however, has been sending billions to Ukraine, so what do you think is a better spend of money? China has invested trillions in a Belt and Road initiative to connect Asia and the Middle East with new roads and high-speed rail systems. They are determined to become the global leader in this crucial field, and they're willing to do whatever it takes to get there. The United States, however, is not spending a dime on infrastructure or mineral exploration. Just look around. It's not China's fault. It's the United States' own fault. Look in the mirror. Stop blaming China for your problems. Stop trying to create a boogeyman of a country that has nothing to do with your own failed policies. So what can the United States do in response? Well, we can't sit idly by and watch as China tightens its stranglehold on the global semiconductor industry. We must invest in our own domestic production capabilities, ramp up research and development, reduce our dependence on foreign sources, something we've been saying for years right here on this show. We're sitting on mountains of minerals, oil, natural gas. They sit right beneath our soil. So stop building military bases in Australia and instead start building railroads that can transport resources, build bridges that don't crumble. Folks, this is an economic war. Plain and simple, China is playing chess while the United States seems to be stuck playing checkers. It's time for us to wake up, recognize our own man-made threat, one that we created. Look, as an investor, I'm putting a lot of my money into these smaller exploration companies that are helping bring minerals out of the ground. I've been investing in gold producers, silver explorers, and other minerals projects, uranium projects, lithium projects, because I see the writing on the wall. So that's the news update part of today's video. Now here's the sponsor for today's video, which is tied directly to the mineral exploration that needs to happen in North America for us to be competitive. Guys, you could make a lot of money with what I'm about to show you. This company is called Callinex. Here is their stock ticker on your screen. And guys, this stock could explode once again if history is any indication. Now, many of you made a lot of money when I told you about this company last year. I told you about them right before they announced drilling results. I got so many emails from you guys thanking me for the tip because you made a lot of money. Again, it's not me, it's you. I'm giving you the information, then you're doing your own homework. So that's on you. Good job. Now, back in September when I told you about them, they announced drilling results, and that's usually when a stock explodes. Now, no one has a crystal ball, right? We don't know what a stock could do, but normally when you announce drilling results and it's positive, the stock goes up. So it's incredibly important to position your trades right before drilling results are announced. And again, they are getting ready to drill right now between two world-class mines. Let me explain these deposits. This is a game changer, guys. So back in 2020, they discovered a massive gold, silver, and copper deposit that was a world-class discovery called the Rainbow Project. When they announced this discovery, their stock went from 79 cents on June 12th to $4.49 in February. That's a massive 400% move. That was the Rainbow Project of gold, silver, and copper. So that was number one. Then nearby, they discovered another major deposit of gold, silver, and copper called the Alchemist Discovery. Their stock moved 150%. Again, investors made a ton of money buying some shares before they announced drilling results. So the reason that I'm releasing this video now is because we are expecting drilling results very soon from a new project right in between the Rainbow Project and the Alchemist Project. And they believe that this project is the feeder spot for these other two world-class projects. So did you hear me? The spot they're currently drilling in is between these two world-class gold, silver, and copper deposits. This is a VMS location. If you don't know what that is or don't follow mineral mining like I do, this simply means it's a volcanic location. And these minerals came from a massive underground volcanic eruption. And they believe that this new middle spot is the center of everything, the feeder spot for these other mineral deposits. So that's why we wanted to get this video out to you right now before they announce drilling results. Again, no one has a crystal ball. No one knows what this stock could do, but I love this company. I love their track record in finding multiple world-class deposits for minerals that we desperately need right now. Silver, copper are particularly, they're just used about in every electronic device that we use. Think about it, right? We cannot keep relying on China for these minerals. We need full-scale production programs in North America to get up to par with where we are in China. Just remember, as an example, I told you about Callinex's silver production back in early September. If you've been watching this show, you know that I told you about them in early September. And then a short time later, they announced drilling results. Their stock price went from an approximate $1.30 a share to over $2 a share. That was in September. And I'm anxiously awaiting their next round of drilling results. So if you were to invest in this stock today, ahead of their drilling results, you'd potentially make a lot of money. I'm not telling you to do that. It's totally up to you. I'm telling you that's what I look for when I invest in these smaller cap discovery and exploration companies. In my opinion, this is the stock you buy if you want big moves, big profits. Now, let me repeat myself because I think this is very important. In 2020, they were in a drilling session, and upon announcing the discovery of the Rainbow deposit, their stock price went from 79 cents a share on June 12, 2020, you can look it up, to $4.49 on February 5th, 2021, a 468% move. Then it also had a one-week 150% move on drilling news between July 17th and July 24th of 2020. So the reason I'm releasing this video today is because the company's actively drilling between these two spots, and they could announce something very, very soon. Right now, the entire market has been rocked by this news out of China, right? And everything that's going on with the chip manufacturing. So stocks have pulled back a little bit, offering us a nice entry point right now. Callinex is trading at $2.16 a share as of this recording. They're up 81% over the past year, and they're down about 2% over the past month. Again, a big discount from their recent highs. A couple of other points on Callinex. This company has massive inside ownership of their stock, which is super important with these small companies because that means a lot of skin in the game. So between management, friends, family, and associates, the team owns a huge portion of the company's shares. And on top of that, institutions own another 30%. So more than half of the company is held by very tight shareholders who want to see a full vision play out of this company, right? Then they'll make a lot of money eventually. They have a lot of money invested and want to see this company explode so they can make massive profits. This is a fast-moving company, and another great thing that I look for in companies is their debt structure, and this company has no debt. That's huge. They have a team of Hall of Fame geologists also in their bullpen. No debt and great geologists on their team, and a great track record. The other big reason I'm so bullish on this company is where they're mining right now. They are in the safest and most mining-friendly jurisdictions in Canada. They're not in China. They're not in Russia. They're not in France. Right? They are in North America drilling where this is happening in a very important safe jurisdiction. The last time I told you about this company, their stock was under $2. Now it's over $2, and they are about to announce drilling results on this new spot again. So again, here is their stock ticker on your screen right now. You can find them on any of the major exchanges. I personally use E-Trade when I buy my commodities stocks, but you can use whatever you'd like. I'll have a link to their website in the description below so you can go and read their latest drilling projects, read up on their copper and gold reports, and study this company. Go and do your own due diligence on this company. Look at their past drilling results. Study how much their stock price has surged after they announced drilling results. It's all public. You can see exactly what I see, and you'll see exactly why I'm so excited about this company. And all of these birds here in Scotland are happy now as well that it's finally stopped raining. And we'll see you next time, everyone.